It used to be 800,000, it's probably 1 million per Bitcoin. And we could have that in this halving. I'm supposing Bitcoin will surpass gold because it does more, but that's a kind of first target. And it's not, I mean, of course, they're both moving, right? But it's not that far away. I think Bitcoin's oversold at the moment. So the fundamentals are what matters, and you can't ignore the fundamentals in the longer term. And I think the other thing that is interesting is not very much of gold is in ETFs and assets trade at the margin, right? The price is discovered at the margin. A lot of gold is probably in vaults and stuff. And so if you get, if Bitcoin starts to get closer, so it's on Bloomberg and CNBC that Bitcoin's growing, it's getting compared to gold on a market cap basis, what a financial news, then I think you might see people selling gold ETFs and buying Bitcoin because it's similar concepts, and one's growing, the other one's stagnant, and has been for, I don't know. I used to have some gold in my portfolio when I first started trading, I don't know, 30 years ago or something, and I decided it was a gold brick. Like it was stagnant, sold it all. I still think that, right? I mean, yes, it's a bit of a macro hedge, but so is the US dollar, right? Or the Swiss franc. So, um, so I think Bitcoin has the growth story and stronger scarcity and more use cases, and permissionless money is important and useful. So, yeah, I think the gold target could be there, and the correlation. There's a day, if it was earlier this week, that like the Nasdaq was down, or the US stock indexes were down 5%, and they're losing their hair, right? Because 5% move across the board in equities is like, oh no, it's like Bitcoin fell 50% or something, right? Like, it's scary. That's a big move to what stock traders are used to, and Bitcoin went up 5%. So I'm like, okay, there's a decorrelation when it matters, right? I think the other thing that you get is that Bitcoin is there's something structural about the Bitcoin market that all the Bitcoiners are vying to buy more. So it's not a lack of interest, right? If it falls like good, I could buy more, except they don't have any money left. So because they're in, and so there's not that much money that's able to buy dips. And even the people who get money, like Sailor, they FOMO it in, right? They're more scared that it's going to go up, or they want to stack it quickly to get annualized yield, like rate of increase in Bitcoin per share. So they don't like wait for a drop or something. And waiting for a drop is a bad statistic, right? I figured this out like 2013 as soon as I started trading Bitcoin. I was like, well, wait a minute, this thing's got an exponential adoption curve, and it's volatile. If you just assume it's a random variable moving around an exponential curve, and you think you're going to sell it and buy it back lower, the odds are clearly against you. Just some basic math, right? So people are going to tend to buy and run out of money. So anyway, the point is that because they're all in, if there's a price pullback, there's not that much liquidity to buy it. Whereas with equities, they have, it's diversified. So there are portfolio managers and individual traders who would say, well, I'll sell some Microsoft, some Tesla, some whatever, and buy Bitcoin because Bitcoin's down, and I believe in the long-term trend, right? So the fact that you don't have that, going to be some we call like value traders doing market making who are buying Bitcoin as it falls and then taking a profit when it rises and repeating it. And you can see the pattern. Like there's some APIs on a Bitfinex exchange called Bitfinex Longs, and you can see because over the last month or so they bought how many thousand Bitcoin? I don't know, like 15,000 Bitcoin or something on margin, and sold it probably about $10,000. So anyway, it looked like they made 20 to $25 million on that trade, and they did more. So whenever Bitcoin's down a bit, they start buying. And now the reason I say sort of saying they start buying is because you can see it. They're not doing it in a manual way. There's a kind of TWAP, right? It's well, not even that. It's just buying like 500 or 1,000 Bitcoins a day, but every minute it's nibbling a bit in a straight line. And so you can calculate, I mean, there's other traders mixed in, but you can see the straight line and so you can figure out, oh, they turned it on. And it gets, if it falls further, it starts buying faster. So I don't know, maybe there's some manual human adjustment of this trading thing, but I call that like market making, right? And they make money doing it, so other people can see they're doing it and they can start doing that too. And then maybe that'll become a more exciting thing to do than to say stocks are down, let's sell Bitcoin because it will fall faster, and then they'll short it and then buy it back or something, right? So of course, when you get that day where Bitcoin jumps 5% up, that could cost them a lot of money with what they're doing. Probably some hedge fund with a lot of leverage, shorting Bitcoin on the open, buying it back half an hour later or something, right? So yes, I think, but like overall in terms of correlation, I mean, like zoom out, right? Bitcoin's up what, 5.5, 6 times since the bottom of the bear market. US stock index is sure on. So I don't believe it.
I did a quick calc before, Adam. You said what happens if we get to gold parity? It's 1.1 million USD at the moment at current prices. So basically, and I ran this exercise. I've got some silver coins, I've got a gold coin, and I've got Bitcoin. And if you look at what $5,000 worth of silver coins is, it's a fistful, right? You can bench press it. It's a heavy weight of mass. If you then look at your gold coin, it's literally a single coin, right? So the exponential decay in terms of the amount of space it has. And you think about Bitcoin, you could have $1 billion and it'd be the same size, and you can zip it in and out of a safe on the other side of the world. Suddenly you realize that the exponential change. This is why my price target for Bitcoin is 10.8 kilograms of gold, because that's parity, and that's just where it starts.
We just heard from James that gold parity would have us at 1.1 million a coin. Are you telling me that there's a possibility of us breaking gold parity potentially this cycle? And what would place the odds of that happening? Bitcoin Well is the best place to be buying and selling Bitcoin in Canada and the US. And now with Bitcoin Well Infinite, it's also the best place to be making large buys at their OTC desk of over $50,000. Their white glove service gives you fast transactions, no slippage, and the lowest fees. You can scan the QR code on the screen or simply head to bitcoinwell.com/BTC sessions to sign up today. And you can share your own personalized referral link to earn commissions.
Well, I think the odds are better than people think because, it's a dynamic system. So yes, it's if everything else stays equal, like if gold is not impacted by Bitcoin's growth and people's conviction in gold facing an onslaught of Bloomberg and CNB discussion about, oh no, Bitcoin is now a third of gold and gold's fallen 20%. Did that 20% come from Bitcoin? And did that go from gold to Bitcoin? I think that could change fast, right? So to actually reach parity, half or a third of that could come from gold, money leaving gold, because Bitcoin's Sharpe ratio is, as was mentioned earlier, like risk-adjusted return is an outlier for like 15 years or something, right? So stubborn gold owners might eventually get on the train, right? And if they start, you get followers. A lot of TradFi financial advisors and traders are momentum traders, saying they'll call people when something's up or down, tell them to chase it up or chase it down, right? So yes, I think it could be closer than people think, and I do think optimistic too, because so this third wave of money. The first wave is that people buying retail, and then the new wave being ETFs, the second wave, and the third wave being institutions. But like the second wave money, the ETF buyers, if they're talking to their financial advisor or their broker and they want to buy Bitcoin ETF, it's not money they're wiring in. It's like something in their portfolio. So the question is going to be, what do you want to sell, right? Where do you want to take the money from? The obvious answer is, well, I'm buying digital gold, I'll sell the physical, right? So it's just that bias will have an effect. So And there's not that much gold, like the percentage of gold that's in ETFs is a lot smaller than Bitcoin, right? So that if that is the market, the active market is what set the price. So even though gold is a lot bigger, the active market in it that could move the price could be smaller. I'm not a gold price expert, but that's just my theory about it, that if you've got a much smaller market that's actively traded, you know, the impact on gold ETFs could be much bigger than you'd expect because the market's smaller compared to the asset, because most of it's just cold parked and not used, right?
Fair. Well, Eric, I want to, sorry for hogging the mic for a second, but I had a few things I had to get out there. Thoughts, questions? Go ahead, man.
Yeah, it's this is incredibly bullish. And so I think what's interesting about the gold piece too is that from like a, you know, quantifiable market cap perspective, when you look at the where gold reserves kind of exist and how they exist, you know, a pretty large proportion of that market is actually just like bullion and jewelry. And then there's central bank reserves and there's, you know, a few other categories. And then I think that's one of the most interesting things to Adam's point about how the gold ETFs are such a small percentage of the total market capitalization of gold. And then a large percentage of that is actually just in like physical form jewelry. So like based on that, like if we reach based on, you know, supply of gold above ground times market price of gold, if Bitcoin's market capitalization reaches that market capitalization, well, we've already kind of surpassed, I would call gold parity reaching that probably much less than whatever that number is, because there's a lot of people that, you know, are still going to be wearing their jewelry and things like that, et cetera. So from like a scarce commodity safe haven type asset, that's protection against fiat currency, I think that we'll surpass that, you know, before we even start taking over the supply of gold. That's like, you know, a large allocation that exists within the market of like jewelry.
Bitcoin Well is the best place to be buying and selling Bitcoin in Canada and the US. And now with Bitcoin Well Infinite, it's also the best place to be making large buys at their OTC desk of over $50,000. Their white glove service gives you fast transactions, no slippage, and the lowest fees. You can scan the QR code on the screen or simply head to bitcoinwell.com/BTC sessions to sign up today. And you can share your own personalized referral link to earn commissions.